And joining us now is expert economic futurist Andrew Busch, who is also CEO at BPI. So let's start out with a lump sum to make the division easier here. Obviously, not everybody is lucky enough to have $300,000 or $300,000 lying around. But if you were to have that, how would you divide it up?
Yeah, so let's level set. First of all, from an investment standpoint, we're coming through the worst disruptive period of our lifetimes. That is, we've had COVID, pandemic, and we also have a war that's impacting the world, obviously, globally. So that's kind of the environment that we're in. The second thing that I try to tell people when I give keynotes across the United States is this, like, when is the easiest time to invest in risky assets? It's when the central bank is cutting interest rates and making money easy, and when the federal government is spending a lot of money and doing the same thing. Well, we had that from about mid-2020 to the beginning of 2022. That's reversed because of inflation. So now we have the opposite of easy time to make money in risky assets. The central banks across the world are raising interest rates, and governments are generally cutting back on spending. So that's kind of the environment that we're heading into in 2023. So there's a lot of focus on central banks and whether or not inflation will be tamed. And if that's the case, then risky assets start to look a little bit better going into 2023.
Okay, so let's talk about, I want to talk about the stock market. I want to talk about real estate. Let's start with real estate. Would you put your money into real estate right now?
Yeah, it's all about location, location, location. I would say the central business districts are going to be very challenged, like office space. It's going to be really tough for older buildings in all of the major cities because people moved away from the major cities because of COVID. So I think there's opportunities for the newer buildings that have all the bells and whistles, smart buildings. Those are the people that are going to do well in this environment overall. In the United States, as far as like house flipping and that kind of crazy activity, that's not going to happen because the cost of housing is, the affordability has gone down so much. So that's the problem there. Interest rates are going to remain high for a while, and that's going to pull back on consumers' ability to really buy and get into houses. So that's going to be a problem for a while. But apartment buildings, they'll do better, than that. But again, it's all about location. The South is going to perform much better than the North in the United States. People are moving to Texas, Arizona, North Carolina, where I live, South Carolina, and Florida. Those are the places that will do better than the rest of the country.
Okay, what about the stock market?
Yeah, so stocks, like, I'm not an individual stock picker, but I'm going to give you 3 areas that I really like, really over the next, not just 2023, but 2 and 5 years. First of all is defense. Obviously, the war in the Ukraine has led to an existential threat for Europe, so they're spending a lot more on defense. So I like that as an area. The United States is going to spend more, and then, of course, the world is just a much more dangerous place. The second thing I really like is synthetic biology, and that cuts across a lot of different sectors of the economy, from agriculture to health, but there's great advances that are happening in that. mRNA is a great example of that. And then finally, alternative fuels. And the reason why I say that, like, everybody picks alternative fuels, but here's why in the U.S. The U.S. passed this bill called the Inflation Reduction Act, $369 billion worth of subsidies for reducing greenhouse gas emissions. And there's a ton of research that's going to come out of that. I'm very hopeful that we're going to find some great solutions from that over the next 2 to 5 years.
Okay, so my final question for you, what about inflation? Does inflation offer any opportunities?
Yeah, we're already seeing the markets react to it. We're getting glimpses that inflation will be coming off. Tomorrow we get U.S. CPI, so we'll see what goes on there. But I think we've seen the peak for inflation here in the United States. I think it will continue to go lower as the year goes on. There's already numbers that we're seeing that are showing that. So the opportunity would be to buy, government debt, buy debt overall. It really depends on where you want to place your bets. Corporate debt is much more risky. High yield debt is a little bit more risky, obviously, than that. So there's some interesting areas there. But longer term, I'm not a huge fan because I think inflation is going to stick around somewhere between the 3 to 4% area in the United States and higher globally.
Okay, Andrew, this was excellent, and I hope that everybody who's watching has learned something from this little conversation that we had. Definitely need some tips as we go into the new year. You got me thinking what I'm going to do with my savings.